Great and beautiful morning and evening to you all, wherever you are joining me at this hour. Welcome to 341 edition of Investdata Trading Academy Live with Ambrose. Yes, I would say that the market across the globe at this moment is still very much mixed, while some markets are still in the red. Some are opening, in a flat, mode, starting for direction, while some are already in the red. They are in the red because of what one reason or the other. And I told you yesterday that the market will continue to respond to what the global data that we are looking at. This will influence decision of what traders and investors in different domains in US, in Asia, in Europe, and at the same time Africa. Why NGS is not left behind. We saw market reacting toward some publication that came recently about downgrading Nigeria from frontier to unclassified status. These are also seen publication from CBN that the banks will not spend the FS gain. All those stuff are just trying to influence market direction, and also sentiment, like what I said, that psychology and also perception is what is also putting the market in this direction. But I will tell you that our market structure locally here has remained intact. As far as I am concerned, post COVID-19 2020 to date, we have seen that the market has sustained its momentum on the strength of what company performance and also institutional player in Nigeria, not on foreign investor. That means if we have been downgraded on frontier market, and at the same time, we are seeing some positive data or sentiment locally. What we are seeing is just sentiment and reaction to the news. Who is going to last? That means this negative sentiment we are seeing will not last, and investors will have that at the back of their mind. Also, one thing is that look at where the market has gone from the beginning of the year to this level before pulling back. Pulling back is an opportunity for all those that has cash. But if you are in good position, you don't need to panic in the market. Also, I will do more of this when I come to the local market, where we're looking at technical analysis, to see how the market has pulled back, what they're going to watch out in the market. Investors should not be panicking at all in this kind of market at all, because I tell you the factors ahead that will shape our market are becoming an increase. Why I say increase? Because we're going to see the inflation figure, we're going to see the MPC meeting, and also don't forget that anywhere in the world, which I've said in this class, that this last quarter of the year is the most active active quarter, of the year. If that is what you know, and you know that seasonality will come with the end of the quarter, which is last quarter of the year, that means if you are patient, what you are seeing is just a reaction. And I tell you that company performance, apart from the industrial, the manufacturing sector, which we have seen that the impact of the FS which I know is going to reflect more also on their Q3. But their service sector that company have done well. That is where you should be also looking at. Pulling back now in price or pull back, whatever I call it, is an opportunity for those that have cash. Like I tell you that at times cash is king. Now that we have the opportunity to launch back to the market, you can't take position and average down. Why am I bringing down? I bring down a company that has fundamental, that has good prospect to grow their earning power at the end of the day. That means the pullback that we have cash is to buy into that same company, average down. So when they come up with it, because I tell you, our market is already on this northward direction. This is a pullback. Also, that will drive the market is that I've said it earlier and also repeat again in this class that the body language of the incumbent government or the new government that was in so far has shown that yes, they're going to use this capital market to drive the growth in the economy. And the capital market cannot be down. Why the government to use it? That means anything we're seeing now is just a phase. That means that it's a phase that it will soon pass. Because once you start seeing in Q2, those companies that will perform well, trying to extend a track record of what they've done in Q1, Q2, will change in their performance. And that is why if you are not really key for the master class, I will tell you this is an opportunity. When I'm seeing this pullback, it gives me more confidence that those are going to participate in that master class. You're going to see opportunity that will put them real return even before the 90 days time frame of the master class. Why? Because once we see this pullback, opportunity have become more enormous now, has increased. We have seen a new entry price, but we want to see how we're going to play, because we don't catch a falling knife. Now that we're seeing the market, then you're patient to see where you see a strong support level. But that is why that masterclass is coming. If you are not really paid, I will urge you at this time that this is the time for you to work, to go and make your payment before the time for discount elapse. Why? Because we are seeing a real opportunity in the market, and that is what capital market is known for. Equity market creates opportunity. Equity and opportunity. These are two things that in the market. If you whether you like it or not, equity and opportunity. But ability to understand those opportunity is what makes you what a successful investor, and that helps you also to grow your wealth. And I believe that there's opportunity right now in the market now, as we're seeing this little correction, which I know that's going to last. But how can you take advantage of this correction ahead of what the last quarter of the year. The seasonality that comes with the last quarter of the year is still on increase. I believe that, for what we are seeing now, don't panic at all. Or you know that if you are in a position that you can take profit, yes, take profit. If not, don't panic at all. Unless something that trying to do that company are not there again, then you can now start selling, because what I said, you have started disintegrating. I would say that's what to do. No need of you to panic or jumping from one stock to another. No. Why when a good stock? Because I tell you, there are industries, sectors, individual companies that have shown strength, that way they are going. Even with this pullback, I can see that since the market opened this morning here in Nigeria, I have seen that our market is trying to resist that decline. Even this morning, you see that the index have been going between that range. It has not go out of the range, because what this is the pullback in the early morning, which has taken almost this midday. I believe that as what people are telling about the pullback in the price, you see that the loss will start reducing. It says that before Thursday later this week, we might see a rebound, because this is a result of what reacting to information. Who I tell you that anywhere in the world, this is what creates the volatility that we see in the market. Nobody knows that on Monday when we are looking to do that market to pull back like this. But information has to react to it. And which I discussed in the class yesterday that was that the market already expressing what a profit taking and sell off yesterday. We see now this morning, the result of all reacting to information. There also another information that will come that also turn the market. For me, I would advise that if you are in good position, don't panic out of position, because I see more upside potential for those stocks that are pulling back when the information from this company start coming, and there's also more policy statement or more positive information either from the macroeconomic side. Yes, you must see that what is happening, the headwind in the economy is high. We are seeing a lot of headwind, macroeconomy is missed, but I tell you, there's a time that you see what called capital market having a disconnection with the economy. At times they come together. Don't forget that capital market or stock market is a leading indicator in any economy. What you are seeing now is a projection, an insight of what we're likely to see in the economy. If the government can sustain these their policies and take it to the end, I will tell you that it will be a good thing for the economy and for the market. That's why anything you are seeing in the market today, don't panic at the position, but don't stay in a store that is going down where there's nothing attracting you there. Once you that, you can easily cut your loss. Loss is part of what trading. That's why I said anybody that says that profit taking or cutting loss is not part of the market is deceiving you. The dynamics of the market is that you must buy low, sell high. Also, when the market goes against you, that's why you put your stop loss in your trading plan, cut your loss. But if you see that instead of cutting your loss at a huge one, that is potential that this stock will rebound, what will exercise what patient. That's why anybody that after applying your technical analysis, your sentiment report, your fundamental, the moral is very key to everybody that you must have patience. There are some people that I know that come say like, oh, after they jump up on the out of a stock, the stock start going up again. Oh, I say why? It's because you didn't exercise patience. Why? If you know that what attracted you in this company are still very much intact, you don't need to jump out. Don't look at opportunity to see if you have fresh cash to avoid down, and also what you extend your waiting period. That is what I will say for now until come back for analysis. Yes, let's look at what is happening globally. I will tell you that Asia market as we speak, for me, the market in Asia is weak this morning because data has also revealed that what is happening in China is not palatable because of data. Even the outcome of the G20 meeting, I see that there's kind of a struggling between US and China that are already also telling on China market. Despite that, we're seeing interest increasing in tech stock, which has also boosted performance in US, other market, even in that Asia, but they still miss performance in Asia because of what the high interest rate expectation and all eyes also on inflationary data that will come from different domain of the world. These are what is also shaping that market. And don't forget that because despite there's cooling in inflation, there's also some signal that yes, most of these mature economies, especially the Western world, are likely also to increase interest rates just to save to play safe and also to guide the recent gain they were achieved in terms of fighting against inflation. Why I say so is that they are seeing that yes, the wheat price or commodity price is oscillating, but what is happening in Russia and Ukraine has not given any gap of slowing down. That tells you that is also another bolt in the whole global scene as we speak today. And that is why, as a trader investor, you must factor all these things. Also, if you look at what is happening also around that region of Asia, we are seeing that Alibaba stock also started selling, thinking because of what? Because of related tech business with the US, because of all these trade issue that is going to come up between US and Russia. It's also threatening that domain. But the good thing is that we are seeing that even India that is in that region, we are seeing that Indian performance also become outstanding of recent. India economy has expanded, even also when inflation in India is also ticking up gradually. All eyes on that inflation figure to come from India. But I'll tell you that the market there is also in green. Now to speak now, India market is also green, and we are seeing that the economic performance for the last 6 months that ended June, we are seeing improvement in India data in terms of economic activities, which is also a plus for them. And also as all eyes are still on the other activities in that region. But coming to what is happening in Europe as we speak right away, Europe market is flat this morning as we speak because of what all eyes are still on what inflation figure. Despite that we have seen Spanish or Spanish inflation figure that also have risen. And for UK we're having a good data in terms of labor. That also shows a kind of the labor market there is cooling off. We're seeing a cooling down there. That is also a plus for that region. But as we speak now, we're seeing most of the indices there are flat, while some are mixed as we say that is starting for what a direction in that region. But good thing is that new wage in UK is also part of what is concerned that it might also trigger inflation in that environment again. But I believe that the Bank of England have also given sign already that they're not likely to slow down on inflation immediately. Yes, everybody has seen that on year or month to month there's a slowdown in inflation, but for interest rate hike they are not ready to slow down yet because they want to make sure that they check this canker one called inflation in that region. And put up also is saying that ECB is not so even when the inflation figure that we're so looking forward to see in that zone, ECB has already set up my mind either to hike rate again because that's why that before now they plan to pause in this their next meeting. But from what is happening around them, I don't see them doing the same. They also more likely maintain a hike also at this point. But good thing again is that investors in this market are also using what is happening to move. That's why we are seeing volatility all over. But if you look at US again, US market as now is still also mixed and bored. The good thing is that the prime market activities there for the new arm, the arm public offer, initial public offer, you can see that that offer is grossly over, I'll say over subscription, not grossly, because grossly oversubscribed, not on the oversubscribed, but more than 10 times oversubscribed as we speak. Why at the same time? We're seeing that Apple is going to launch another phone this morning or this today. That's also I see that it's taking the tech industry around. But I believe that despite the high risk in across the market across the globe, there's also higher return and in expectation. Despite that the speed market is going in volatility, the rate of volatility is increasing. But I'll tell you that the higher risk, higher return. But for you to not to play the market with what with information and with knowledge, don't just play the market for plain sake. You must go with what with knowledge and invest what wisely. That is the only way to stay ahead the market. But I believe that this across the globe now, as stock eyes are still on inflation figure tomorrow for US. Also, we're expecting that ECB also on Thursday will be meeting in for public for their policy meeting. This all is going to shape the market, and at the end of the day, this is what I believe that will bring the kind of a clear direction where the market is also going. And that's why I say at this time, don't need to panic, but hold your position and invest with what? Invest with knowledge. Once this is done, you are good to go. Don't need to panic in the market. Yes, back to Africa market. Africa market is also missed at this one. Why NGS back to our market? NGS is also down as a result of panic position, which I mentioned earlier. But before we go into the chart, want to look at what is happening on NGS right away now. Let's look at the figure as we speak. What is the market telling us that is happening in terms of a figure? That figure will go a long way to tell you if what you are seeing is temporary or what you are seeing has come to stay. Like I said earlier at the intro of this class, that what you are seeing in the market today it just was a temporary thing because of new news that are coming left and right. These are the things I believe that also is driving the fluctuation we are seeing. But I'm not surprised that in any market of the world, you don't expect the market to remain in a up direction. That's why market has what we call different phases, or the accumulation phase, the markup, distribution, and the markdown. And market have gone through there, which also individual stock have gone through these phases. Now market is also entering a decline phase to create an opportunity to buy low, and which also is part of the market. But that is being driven by what? By negative sentiment toward information. But I believe that because that information will make the market also become attractive to create what we call a bargain hunting or bargain opportunity, that tells you that there is also potential in the market. For me, there is no cause for alarm. What we do, let's exercise patience and watch where the market is moving from here. That's for me, there's no cause for alarm. People that have followed me know that when I say so, I say it with confidence because if you understand the market, you can read the market very well. You understand that this market has come what? Has come to stay because the factors that brought the market at this level, yes, they are still very, very much intact. Even additional is going to come, but you not understand what is the sentiment of the people because it's perception that drive market and it's perception and sentiment that provide what liquidity. Now we are seeing a profit-taking sentiment or sell-off sentiment. Another information that will come that will attract sentiment that will provide more liquidity in the market. That's why we need to understand, this, like I'm going to say, the rate of market, when it opened this morning and this hour now, you have seen a little different in it. That market is trying to work to stabilize. Because if you see the rate market open, at almost 700 something basic, point drop. But right now, that reduced from almost that 7 to almost around 500 because people are taking advantage of the low price they see this morning to go into position, and that also have helped the market as well. For me, there's no cause for alarm at all. But rather, we should take advantage of what we are seeing in the market now right away and position in good stock and also take advantage of what we understand that the market is doing and also play it with knowledge. When we are playing the market with knowledge, I tell you, you don't guess, you rather take advantage of what you are hearing, to show what to put in because the chart will review all these things I'm saying now to you so you know exactly what to do. And that's why anytime I'm taking this class, I want us to look at what the chart. The chart is very, very important for every one of us to understand. Once you understand the chart, that means you are yes really playing this market because that tell you the psychology of people who that is the candlestick telling you where the money is flowing for, where the sentiment is flowing for, to flowing to. At that time, you don't need to to panic again. But I can tell you that there's a good news right now that this morning that we are seeing that the market panic or selling is also reducing. Right away, market is doing 66,713.10. Market is down by 583.08 by 0.87, which is almost 0.9. Initially, market had almost 1.2%. When it opened this morning, I see that at this hour, this afternoon, market is also coming down gradually. If you look at the market rate, I won't tell you that the market rate is in miss. The market rate is purely negative. We're having 44 stock against us, 6 gainers. We're having 44 in the loser chart, and that's a lot of what? As a lot of fear. But I tell you, from what I'm telling you now, gradually people are taking advantage of the low price to position to accumulate, what position. But because I said you don't catch a falling knife, you can still wait to see where the market will also do a rebound. But when we go to the chart, we'll not see where it's going to do that rebound so that you cannot target that point to take action. But right now, let's look at the top gainers. The top gainers, we can see that E-Transact is leading the pack for the top gainers right now, followed by NASCOM. You can see Dangote Sugar, you can see Transcorp and Unity Bank. These are the top gainers as we speak right away. But if you look at on the gainers chart, the 6 gainers chart stock, the top 5 are Telarams. You can see Owando there, and also Okomu Oil and Federal Capital and Northern Nigeria Flour Mill. These are the top 5 gainers. For me, we don't need to panic because it's a phase of the market who's also going to change. Then if you look at assets this point have gone as low as almost 14 naira 20 kobo. As we speak now, assets are rebound back to 15 naira. We're seeing also a good volume in assets this morning. People that are designed to take advantage of that pullback. I'm going to discuss about that yield when I enter the chart. Before I enter the chart, so that I understand. You can see that the assets have gone back to what 15 20 as a result of what position taking. I traded about 51.86 million shares this morning, followed by Transcorp 38.17 million shares. UBA also updated at 35.1 million shares. Then Fidelity remained flat at 8 naira. That is also 31.667 million shares. And Senate Bank at 33. Senate Bank has touched as low as 31 this morning. I've gone back again to 33 naira 90 kobo and also traded about 26.8 million shares this morning. These are the terms of activities. But yes, we'll come to the chart right now to see what is happening in the market. Look at the chart here, you can see that the market has broken down the T line here to confirm what a decline phase. But there's another red line that's on the chart now. This one called 50 days moving average, which is what the institutional investor moving average. Anywhere in the market, either mature market, local market, every institutional investor in the market, are guided by what? By 50 days moving average. Once you see them at market above, that means they are still in the market. When you see the market down above, that means they have sold down. But when we see that the market is also coming to back to institutional leverage, once it crosses, it also gives a sign that institutional investors are taking position because they are the ones that provide liquidity, and also you see them coming back to the market with volume. Anyway, you see volume, either in the individual stock or the general market, it gives you what is happening, inside what is happening. That is why it's good to know how to combine this 50 days moving average with your T line and other what another moving average. Because moving average, anyone you are using, whether it's short one or long one, is to filter the news in the market to guide you exactly what is happening in different flows of what of traders. There are some traders that use moving average for them to catch short move in up and down. But for institutional investor, because most of them are long term, they look at what 50 days moving average as what as a gauge for them, their risk and all those stuff. So that when you see market crossing above moving average in the up direction, it tells you that the institutional investor are still in the market and that's where the market is going. When also is coming down, once the close 50-day low, tells that yes, these people are not in the market right away. You will now be waiting when they come back to the market. Once you see also the market crossing 50,000 up again, it's a sign. But for the T line. T line is for us as a trader to know how to gauge the momentum in the market, the strength in the market. All this we are seeing now is because of what reaction to what those central banks saying that banks should not take gain in a gains from the FS to pay anything or to spend it. But I believe that the banks have done well. If you look at all our banks, go and check what apart from the FS gain. I have taken time to look at it at all. If you look at the interest rate of these banks, they have improved. Who to know that before now, and banks have been run on what interest rate and their trading portfolio. Now that they've gone holding, most of them have gone holding, their source of revenue has increased. That means this statement will not affect either their payout. Already you have seen the kind of payout we are seeing from the three dividend paying company. That is a sign where they are going to their dividend yield. And now seeing price correcting again, and also for me it become a clear pointed out that the banks are where you should also be looking at because the yield will come from that side will also be very, very attractive. Even when there is a high yield in the money market, because we are seeing high yield in the banking sector, those that are risk takers also want to be there because of capital appreciation plus the yield. I mean, we don't need to panic at all because I believe that from the what we are seeing the period at the interim, it will give us a clue what we're going to see at the end of the year. Even when Stephen has said they're not going to pay for FS, you can see that what they are paying. Look at the FS, the earning per share as we speak now. Even for those that are posted almost 9 naira, or even 5 naira for 2 naira or 10 naira for their half year, if that trend continue in Q3, they're going to be a better number. Even when they are paying even 60% or 50% of their earnings, is still very, very okay. And before now, that's what they've been doing without even touching the FS game. Before the FS game issue came about. For me, there's no cause for alarm with that statement. That also what matters that with expectation that this sentiment we're seeing will be facing away any moment from now because of what one is trying to pull back and the institutional investor. I told you earlier that they've not been in the market because they are still analyzing the Q2 number after they've seen that the FS policy has affected some performance sector. They are still analyzing. But if a clear direction is given from Q3 result, that's why Q3 result is very, very important for every player in the market, whether we're short term, we're long term, you're an institutional investor, you're a local retail investor. Q3 is very, very important. It will give a clear direction where many companies are going for the financial year ended that will end in December. For me, there's no cause for us to be panicking in the market, but I want to invest with knowledge and information. And that's why if you have not registered for the masterclass, this opportunity for us to key in and come back. It's not only Ambrose that want to discuss. Experts in the market that also people that are attending and know how they know knowledge they are in the they have in the market, how they have shared experience, how they have shared also to pick stock, and this stock have delivered value for them. I believe that this is also what expect that this pullback is going to create more opportunity for those that have cash. I'll say hold your cash because cash is king. After the class or before the class, we'll tell you what to do. For those that also are paying already now, we'll tell you exactly what to do either before the class or after the class because I expect that this pullback will create opportunity. We are still watching, like I said earlier, we don't catch what a falling knife. Yes, if you look at this chart now, you can see that it has crossed the blue one, which is the 8 days exponential, our T line. It's now moving down. But you can see that this red one I said is the 50 days moving average. And if you come here and look your money flow, the money flow is down. The money flow that's already reading around 85, 82 is now to as we speak now toward to 60 to 60, 68. For me, it's not a bad one to still above 50, but it tells that this sell-off we're seeing now, profit taking, as I tell that funds are leaving the market as we speak now because people are taking profit. That's why the money flow is looking down. Now that it's looking down, once we start seeing fund entering again, as position taking comes in, start looking up again. But the good thing is that our eye is fixed on this 3 days moving average. Once it crosses it again, that will tell you that yes, it's beyond panic selling. That means we are seeing that the high institutional investors are also selling up. But before it get there, it turn back, say that it just panic selling. But that's why this 50 days movement is very, very important for us to keep our eyes and what to see. If the market will touch before a rebound, or it don't touch it and rebound, or before there, it's very good to tell us a lot of information. That's why I say I will share it. Also, we'll keep our eyes on this red line. It's very, very, very important. Let's go back to see what. Let me call one indicator here to guide us to do justice to what is happening in the market right away, because it will help us to know exactly. Yes, we have seen a bearish a bearish pattern in the market, or bearish sentiment in the market, but I want to also call another indicator that will help us to see the strength behind the momentum. Okay, I think that is what I need here. Yeah. Yes, I remember I told you that whenever you see that the blue one is above the red one, tells that the momentum is strong, which you have seen from here. To take the place when the market cross, the T line, the index cross the T line, you can see that it's here, and from you can see also there's a cross here too that have been there and has been above the wall. The red one, you can see, it's above the T line. When they test it, like it go up again. Whenever it test it, go up again. But you can see also that return remain before market came down around this point. You can see here it pulled back, it crossed here. And after crossing here, it came back again because market also came back above the T line. You can see that it came up again. But with what we are seeing now, after market has signed trend at this phase now, with these 2 days, pullback we are seeing now, the market is also trying to go, on a negative mode, or a negative momentum. You can see that it's coming down. Once the red one come up again, it tells that this is a bearish market. That's why to all eyes at this. Once the red one cross the blue one up, so that the bear will come in charge of the market. That's why I said we're going to watch this red line here, which is the 50 days moving average, and also watch this. This chart I told you. This is what we call ADS. In the technical analysis, it also tells you to know the strength behind the word, the strength or the momentum behind what is the strength. That is the momentum also to guide what is happening to price or to index. Very, very. If you also look at your movie MACD, which is also a momentum indicator but a lagging, you can see that you're also almost crossing down that means it's a sign of what bearish market. Once it cross below it also tell you that the market is good already. It's already confirming now. These are 2 days they pull back. But once we get to tomorrow, by God grace, or at the end of market today, we'll tell you where the market is heading, from here. That's why I said there's no cause for panicking. Just invest and also invest knowledge. But for those that have cash, pull your cash right away and watch to see where the market will land first, because we don't catch a falling knife. Until we start see that momentum also coming from back to the index generally, and individual, individual sectorial indices, that would not tell you. But for now, hold your cash. For those that are in good position, if you're able to cut your loss before, with your cut loss policy or in your plan, fine. If you're unable, that has gone, just decide patient, especially if those things that attracted you, like I repeat again, is in that you wait, exercise more patient to see the market rebound. But for cash, we that have cash or those that have cash, be happy that market is presenting a better opportunity for you to buy. That's why I said equity and opportunity. These are two things that raise in equity investment. There's opportunity at all time if you know how to catch it. That's why I say you don't trade always, you don't also wait always. Once you see opportunity, you try to trade. But today profit you what again. Now we are seeing opportunity coming. For those that are kind of trapped in any position, don't panic, because we know that what are trapped is not a situation that will last for too long. Like I said at the beginning, it's very, very short. That's why we need to keep. Yes, we come back to see. Don't look at 1 hour chart nicely way now to give us more information. On 1 hour chart, you can see that the market has crossed below the T line. That's called the 50 days. But this is a 1 hour chart that called to confirm a bearish situation on the 1 hour chart. You can see also MACD is becoming more. You can see that the momentum here is increasing. Look at the way the downtrend on the kind of the histogram is increasing, and on the 1 hour chart, you can see that it has crossed the blue one. The blue one is coming down now, and the red, but ADS is still reading 34, on the 1 hour chart. For me, it's not a bad one. Then you quickly look at 15-minute chart for the market. I know about this so that you know exactly what is happening. If you look at the 15 minute, I'll tell you that the market is already bearish. You can see that it's heading below the 50-day moving and also below the T line. But you can see that in the last 15, you can see that green is coming back. All these ones are not repositioned. You can see that strength is coming back. That is why I told you that when the market opened, we saw like almost 700 and something basic point decline that reduced to almost 500 or something. You can see that in the last 15-minute chart, you can see that we are seeing green here. Once you're able to cross again, they give a good sign. But money flow is looking up here, and while your market is around to cross up here, you can see that the way you use long time frame and short time frame is very, very important for giving us a sign that there's hope for the market. Looking at the 15-minute chart. But quickly, before we round up the class, let me quickly show you one thing again that it's good that look at all these time frames, or to know exactly what to do. But if you look at a weekly chart, while just entering the week, like I see that it's still above the T line. And that is that where the 50-day moving average is. I see that MACD is still very positive, but even though it's sliding down, and you can see that also the monthly indicator is already covering, trying to look down. What this one is coming up again. This one, you look at all this to tell you the gauge between the risk involved in the market and what to do next. Yes, we now come back to look at these stocks that are gaining right away. But I think that most stocks are what on the loser chart, but the few that are gaining, especially the life of Owando, how far will it go? We saw Okomo joining that league, and also Capaton. But then look at what is happening in what in Owando. We quickly look at what is happening in Okomo. Then we'll now go and check what is happening in Access and UBA if time permits us to look at exactly what is happening so that you won't be panicking. If you look at this chart now, this just if a week, this is a 1 week chart. Now you can see that already see there is a gap. Today, as speak now, one is already around 9.25 kobo. On a weekly chart, you can see it here. So that tell that the stock, you can see that strong momentum is here. Money flow is looking up. I think that the momentum behind it is high. I see that the green one is looking up, while the red one is down. This red one, orange one is what the ADS itself. ADS is also reading 35 for one do, which for me is a very strong one. But let's come back to a day chart for one do to give us the clear position. A day chart, you can see that there's also a gap up here. Up here, you can see it here on a day chart where the stock has gotten this morning. But you can see that volume is also coming down. Even as it's going up, you can see that volume is coming down. But money flow is very, very strong in this stock. Almost within 97 fund, and the MACD is very sharp. And we're seeing a strong momentum behind it on a daily chart. But quickly look at the 1 hour chart for Wando. That was it. Also, on the 1 hour chart is very strong. You can see that MACD is positive. Money flow is also high around the reading 88 for me. It's a good one for the stock. But let's quickly look at another stock that has a good trend. Let's look at what is happening in Okomu right away. I see Okomu surfacing this morning at the gainer start. But good thing to see that in the last 1 hour, Okomu can see there's almost a bearish engulfing. Looking at this chart, you can see that was still remaining small. For this, the gain he made this morning on this 1 hour chart. In the last 2 hours, you can see that there's a change. It was in green, now it's coming also in red. You need to also watch this stock to also carefully to see where it is going from here. It's very, very important that we know that when we are also trading. You can see that the money flow for me is still high around the 94. But you can see that this momentum indicator is not too strong. Even at this point, it's also looking down already. You can see it here looking down. And money ADS is low at 10, not above 20. Anything above 20, you can see that is strong. That's above 20. You have to watch this the momentum or the strength behind it. The price action up here is not strong. That's why we are seeing 1 day up and 1 day down. Now, sorry, 1 hour up, 1 hour down. Because this is a 1 hour chart we are looking at. Then finally, look at the 15-minute chart for this stock before I look at what is happening. On the 15-minute chart, you can see that yes, that started up here down, but still is down here already. You can see it's gone up here, but has gone down again, but still in green. It has gone up, but still pull back. See that also MACD is already telling us that is looking down. I see that once the blue one cross the red one, and money flow has also looking money flow is also looking down marginally, and we're seeing that ADS is also bending on the one. And money flow, you can see that it's very, very what's it called? ADS is very, very weak. Money flow is not doing badly at 97, but already looking down marginally on the stock. Yes, quickly look at I mentioned UBA and Access. Let me look at them, two of them this morning before we call it a day because of our time. This 15-minute chart for UBA. For UBA, a good one. UBA on almost trading above the T line now. It's a good one. You can see that in the last 15 minutes, you can see that up, red, green again. Let's keep watching. We're seeing good volume also here, and that volume is green. That's a good one for 15-minute chart. And money flow, what's it called? MACD giving us a good sign. You can see what I'm saying, MACD now. We're seeing a positive, a bullish crossover, even at 15-minute chart for UBA. For me, it's a good one. I mean, it's don't need to panic. Yeah, despite that the money flow is still below 50, so that as more money come, more fund enter to change the stock. But as also your ADS is It's also high at 57. So now trying to come up. You want the blue one cross the red one. That is also confirming a strong trend. Yes, we can look at the a day chart for the stock. On a day chart, you can see that it pulled back or tried to resist a decline here. You can see it came down this morning to this. That's why we're having this form of a hammer candle. And when we see a hammer candlestick on a decline market, it's a sign of what resistance. That means bull is underway. In technical analysis, this kind of the candlestick we are seeing here is a sign that the bull is the the buyers are judged. Even when they sell down, they push it up again. That's why the price is still where it is now, around the 14 naira or 14 for what I'm seeing from the chart here. You can see, but money flow is still looking down. Try to also go up here around 44, 42. Not bad. But MACD also MACD is a lag indicator. Also see that also giving a sign of bearish movement, and also ADS is reading 25 basic point, which is also a good one on a day chart. Quickly look at 1 hour chart for UBA before when I look at assets for me. You can see what I'm saying. If you remember, I just mentioned that this 1 hour chart, you can see it was down before. You can see the first 1 hour, the recent 1 hour night has come up again. But once this green one go above the one, that means of course a bullish engulfing. But right now, they are still looking for direction, just to wait at the end of the market to confirm where the market is for this stock. But for me, let's stay patient. There's still hope for the market, and I tell you, the hope for me is very, very strong, and it will come soon. We'll see a turnaround in the market, especially as we are seeing that the president and his team, they are not sleeping. All they are trying to do when they start paying off again in the economy, we will see it. That is to the betterment of this nation. We want people to find a direction where the market is going, where the economy is going. Everything will play out as planned. That will also change the face of the market. Yeah, in 1 hour time, you can see that only you can see that UBA is sharper than what I'm seeing in assets, but assets have pulled back, has been below the T line. You can see for how many hours we're trying to come up. That's resistant in the previous 1 hour. Now it's still around 15. From what I'm seeing, the green one we are seeing here, you can also buying volume here. You can see that's why it's green. Then we'll see that money flow is also low around the 20, and this on the 1 hour chart, not a day chart. That is what I'm seeing right away. Let's look at the 1 hour chart, a day chart for access. That will give us a clear direction. And also, this also a form of what? A form of hammer. You can see you have a long stick here, a longer wig here. You can see that this one chart was decline is yesterday position. Now, if you're able to maintain it, and you might see a turn off from tomorrow in the stock. But also money flow is below 50 and to be there 40 point something basic point. And why we're seeing the momentum or behind the price action is relatively weak, but still above 20 to read the 23. For me, it's also okay for to read the it's below 20, it's reading 19.2 now. That means we need to also keep our eyes on assets. The price action, the momentum behind it is relatively weak, but a turnaround is possible because we're already seeing a hammer formation at the decline, which also a sign of what of a rebound in the up direction. On this note, I will say thank you for your time today. Even our time is fast spent, almost kind of shoot our time today. But I also want to quickly inform you that the live class will not hold tomorrow. Till we'll resume live on Monday. I'll be out of town, and where I'll be going because of the activity I've engaged, I might not be free to do the live class from tomorrow. We'll resume back again fully on Monday by 12. I'll say thank you and enjoy your trading day. Yes, any information I also share on our group as regard the market, even though I'm not doing live class, those that are in the other group will also see what I'll be showing from where I am looking at the markets too. I'll say enjoy the rest of your day. Bye.